Testing, testing, 1, 2, 3, testing, 1, 2, 3. The Wayne in Spain falls mainly on the plains. The ants in France stay mainly in your bonds. Good morning, everybody. Good morning, FX Street. Please confirm that you have audio, that you have picture, that you have attendance. Bueller. All right, and I forgot. So I got it in one chat, and I don't have it in a different chat. Let's see how I update my chat over on this other thing. My platform. No, it won't let me. All right, it's the oddest thing. I guess because I'm on the FX Street channel, on the YouTube channel. Okay, so I'm going to have to use chat over there. Got it. Let me close this window and move that over there. Hang on. Sorry, life with multiple screens, right? Hang on. Just got to move things around. Almost there. All right, so the chat window's there. Let me move that. That I don't need. Let me minimize that. Let me move that over. Let me close that other window. I know, right? Hang on, almost done. Okay, I'm going to put that over there. I'm going to make this a little smaller, a little taller. I'm going to take that chat, and I'm going to make that different, and then I'm going to drag it up over there. And then I'm going to make that smaller. Almost done. I think that'll work. That'll do, pig. That'll do. So let's try this. You should be able to see charts. Nice. So good morning. Nice to see you. My name is Wayne McDonell. I am the Chief FX Market Strategist for TradersWay.com. Thank you, FX Street, for hosting this webinar for the 158th month in a row. 158 months. It's amazing. A lot of things have changed over the last, 12 and a half, almost 13 years. The one thing that hasn't changed is, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please stay small, stay humble, focus on the long term, and never, ever, ever risk money you cannot afford to lose. Oh, one thing that's changed recently is I only have 5 monitors. When was the last time I only had 5 monitors? So I used to have 18. So 5 is like 5. It's weird. My office doesn't get hot anymore. Pretty amazing, huh? Only 5 screens. Now, I haven't lost any real estate, but 5 4K screens equals the same as 18 1080s. So anyways, oh, you know what else has changed? Here's one other thing that's changed. Oh. Listen. I got this exactly 1 week ago. It's still in the folder. It's so new. You were ready for this? Oh, snap. Nice. You look, but you cannot touch. Told my son to carry it. He's like, yeah, I got you, Dad. I'm like, yeah, you're carrying a Ferrari in your hands, son. So I trust you, but be careful. Cool. So anyways, and I graduated with honors on the Dean's List, which is good. So that's nice. Worked hard for that. So anyways, I only have 1 more year and then I get my 2nd degree. So thank you. Namaste. So that degree is in macroeconomics. So not only do I have 20 years of experience trading Forex, which is macroeconomics, right? I've also passed the Series 3, which is, it's not really, I don't know what the Series 3 is, but it's sort of fundamentals. And now a degree from Harvard. So boom, got it. Out of the way, done. Okay, so let's move on. .com. We have non-farm payrolls today. ADP came out very poor on Wednesday, and it was really interesting because in my daily webinar with Traders Way clients, before the news came out, I said that this is a time when you get sort of divergence between these two economic indicators, because if you go back a million years ago, there was no relationship between how ADP came out and how NFP came out. And then we had the global financial crisis and zero interest rate policies and all that kind of stuff. And all the central banks around the world were manipulating their currencies to benefit their economies. You know, and particularly in the United States, the Fed was trying to create inflation and stabilize the economy. And they did that through increasing asset prices in the stock market, right? But also creating jobs. So therefore, if the government is just manufacturing jobs artificially almost by creating artificially low interest rate levels, but on top of that, increasing the money supply, well then, yeah, they're all going to get jobs, right? So anyway, so there was a high correlation, but historically there's a difference between the two numbers. The NFP number, which we get today, is actually two different reports. There's no such thing. There is no non-farm payrolls report. The employment situation report looks at the establishment survey and the household survey. There's two different surveys. And they survey different audiences and get different types of numbers. And then you use fuzzy logic and say, okay, we talked to 50,000 people. Let's extrapolate from that data set, from our sample, 50,000, and give out a number that represents 350 million people in the United States. A little bit of a stretch, right? And that's all employers, right? That's all household, that's all employers, but there's some fuzzy logic to the whole thing. Now, ADP has clients that are not big enough to have their own payroll department and their own HR department. So we could say that the ADP number represents small and medium-sized businesses. So what we talked about yesterday, before ADP came out, I said, well, we're going to start to see a divergence between the numbers, or potentially could. And what the number will show is if ADP comes out bad, it's not that the economy is bad. It's just small businesses are now finding it hard to compete with larger businesses like, let's say, Google, where small businesses, hey, come work for us, we'll pay you some money. And Google says, oh, come work for us, we'll pay you more money, and we'll give you free lunch, and we'll give you stock benefits, and we'll have a masseuse come by your cube and massage your shoulders for you. And all of a sudden you're like, yeah, I'll go work for Google, thank you. And you're not going to work for the small business, right? Because they can't afford all that nonsense, so they don't have fake money. So that's what I talked about before ADP came out, and then ADP came out really bad. So I just want to make it clear that it doesn't necessarily make NFP bad. They're not the same thing. They're sort of oranges compared to apples, sort of, okay? There's a relationship, but they're different and all that kind of stuff. So make sure you understand what these numbers are, okay, fundamentally speaking. So at 8:30, we'll get the news. There'll be some volatility. And there might be a scalp, and there might be a counter trend trade. Has everyone read the article that I wrote and published on FX Street about how to trade the employment situation report, including the scalp, the high volatility event-driven strategy, and the counter trend trade? Has everyone read that? And by the way, yes, thank you for everyone that said congratulations. That Harvard degree was no easy matter. I calculated it. I spend 45 weeks out of the year studying. 45 weeks out of the year. Yeah, it's a lot. Okay. Few people. Nice. Okay. Oh, how do I get rid of this? Let's do this. Exit. Oh, not everyone. Well, perhaps the moderator can post a link. But you should do that. Okay. So let's just kind of take a look, do a sit rep, do a situational report about markets in general. And then we'll go back and we'll identify key levels of support and resistance for, oops, why don't that go away? There you go. We'll do key levels of support and resistance for some of the currencies that you probably trade, like euro dollar. Okay. Cool. Okay, that's a bullish support. Let me make this a little smaller. Okay, so bulls are definitely in the game. We talked about if there are bears. We did this, I think, on Monday for Traders Way. By the way, please visit tradersway.com and open an account. There's two, right? There's two reasons. Oh, and thank you, moderator. There's two reasons. One, I'd like to help you learn how to trade properly. So I do daily webinars for Traders Way clients. So visit tradersway.com, open an account. It could be a demo, that's fine. And in the back office, there's a link to the webinars. I do them every day, Monday through Friday at 7:30 in the morning, New York time. Okay, so that's one free resource for me to help you learn how to trade. Great. The second thing is if you go to fxbootcamp.com/charts, you can download my chart templates that you see here and put them into your MT4. Oh, thank you very much, Gary. So I'll put this up here so you can get it. It's fxbootcamp.com/. Sorry about that. It's because I was typing. Okay, I'll turn the fire off. Okay, so you can download my chart templates, install them into your MT4. That includes the daily pivot points, the weekly pivot points, the monthly pivot points, my oscillators, the moving averages, all my profiles, any custom indicators I use like the MACD and all that kind of stuff. It's all there. Okay. So thank you for becoming a client of Traders Way. All right. So on Monday, what we discussed is that we were down here on Monday. So if you were a bull on Monday, what we're talking about is an up, a down, and an up, and a down, and up. And it would probably take a week, week and a half. Okay. Bears, they had two places to sell. We had this as a sell zone, and then we have this as a sell zone. Okay. Right now, bulls are hanging in there. Oh, thanks. You know what? You're right. Moderator got it better than me. Moderator's correct. Thank you, moderator. What an amazing moderator. Like, that's amazing. It's like this dude doesn't even know his own website. You're totally right, moderator. I can't edit this now. Why won't it let me edit? Oh, I guess it's here. You're totally right. HDP. Don't you just love it? So when I type, all those things go crazy. Sorry about that. I'll turn the fire off now. You're totally right. Thank you, moderator. All right. I was wondering if I can even copy that. I don't think so, though. Okay, so let's just burn, not through these yens. We'll do that later. That just happened to be on my chart. All right, so let's go over here. S wants to know, when will Bitcoin die? Why would Bitcoin die? Yeah, we killed a trade. What was up here? Probably euro dollar, right? Why don't we put euro dollar there? So one thing that you get when you go to charts.fxbootcamp.com is you get all these templates, right? So you can just simply go pa-chow and bring normality to your life. So there's this. All right, so we might as well do euro dollar. So we're going to trade this one for NFP. This is one that we need to do. So when preparing to trade non-farm payrolls, you have to realize that there is the vol trade, and then there's the counter trend trade. Okay, we'll go over the volatility trade later. So let's go over the counter trend now. So the key is you need to find your levels of resistance. Okay. The key one that I'm looking at today, you know what? Let's just, well, all right, I'll draw it. Okay. This whole area actually is the projected high for the month. Okay. Now the interesting thing about this, let me change these charts a little bit. At the beginning of the month, if you were a bull, this area here was your level of support. And to say it differently, if you were a bull on euro dollar, this was your monthly entry for the month of June. And based on that, your predicted high, your conservative target was this price right here, and your aggressive target is just a little bit higher. There it is. Okay. On the first of the month, which is this day here, if you were a bull, your first target, it was here. That's your conservative target. You're going to hit that for sure in the back of your mind is what you're saying. And your aggressive target that you would really like to hit is that one. And anything above that is unexpected. And by unexpected, I mean carries a higher level of uncertainty. Uncertainty can be risk. So Ali says, would you sell because of this? Well, in my book, I describe that gray zone as a pivot, profit zone. So is that equal to, or is that synonymous with a sell zone? Or is it somehow a little bit different? Barry says, have I slept? Yeah, actually, I've been trying to get some sleep lately now that school's done. Oh, by the way, I went racing BMWs yesterday. Drove an M3, a 430, a 330, an M3, 330, 350, whatever, a 3 Series M, an X3M, a 430i. The X7, by the way, I would have to say is the most comfortable car I've driven. And I've driven a lot of cars. I've owned over 100 cars. That was one nice vehicle. And a couple of others, but then I went racing. The 330i. Did I record it? Not really. I mean, I have a couple of nonsense kind of things on my phone, but I went racing. Out of 18 people, I came in third. Yeah, there's not really a video per se. Oh, I turned my phone off because I get things bleeping. So anyways, just an update on that. So it's pretty good. It was good. I had a good time. So I'm trying to catch up now that school's over to have a little bit of fun in my life. So anyways, yeah, so the pivot profit zone is different. It's not a sell zone per se. Now, there are times when it can. Oh, Marcus doesn't like it. I'm sorry, Marcus. I didn't know that rubbed you the wrong way. Okay. So when you get into this zone here, it can, in certain situations, create trades, but you shouldn't generally look for trades, right? How much was that? It was free, James. Anyone could do it. I bought a BMW, but they gave it to me for free. So I don't know. I don't think it cost anything. But anyways, typically a counter trend happens when you hit your targets too early, when the market is overly aggressive. In this situation, we're sort of getting closer to the middle of the month and all that kind of stuff. So if you want to be a bear, which is a different way of saying it. So someone asked me if this is a sell zone. No, it's not really a sell zone. But you can look at this as being overbought. Okay? If you're already wanting to buy dollar and sell euro, this is a place where you can look for it, but you shouldn't be confident per se. You should be cautious and look for a reversal pattern here. Okay? One thing to note, though, is that these big moves respected these lines. Actually, yeah, the question is, did I have a problem with the slick track? So it was raining yesterday, and we did have puddles. They actually didn't give us the M3 for the racetrack. They gave us a 330i, and it wasn't even all-wheel drive. It was rear-wheel drive, which I thought was really strange. But it had all the M upgrades. So it had the M exhaust, the M suspension, and all that kind of stuff on the M tranny. And it worked fine. I drove them very, very, very aggressively. I kind of freaked out some of the other drivers. But so anyways, yeah, odd choice. I would have thought it would have been an X drive. And he said they would have been quicker. But he says what you want in the racetrack is you want the nose down action of the front of the car coming down, so you can make the turns. So I don't know, some weird compromise. Okay, so recognize that these are not random events or random occurrences. These are prices we knew would be important, 1, 2, 3, a week and a half ahead of time. Yeah, Ali, I guess on the track that was enough. Okay, that was enough. But I drove a bunch of M's on the street. But anyways. So if you wanted a counter trend trade, I'd say this price here, like if NFP spikes up, let's try to put this into English. Let's say NFP comes out really good, whatever that means to you, really good. If it spikes up to that level, okay, I'd look for the counter this way, okay? If it goes higher than that, there isn't much I can do to coach you in that scenario because it's too much. It's unpredictable at that point. Okay. So, right? So think of that. Okay. And just for the short term, I don't think it would reverse like all the way down. I'm just saying for the rest of the day, because like next week it could come down and you can buy it back up this way. It'd be a little lower than that, but okay. Now, if it turns bearish, then you need to treat that as a double top. Okay? So that means what? I would say probably back to this. Well, the conservative area would be here. The most aggressive area would be back here. Okay? Which means we would get down to here pretty quick, and then it would work its way back. So John A says, I'm expecting a huge miss on NFP based on the ADP numbers. So you missed the thing I gave in the beginning, John, where I tried to explain that there's a reason for the bad ADP, and it wouldn't have a large impact on NFP. Okay. Okay, so John, I've answered that question too. How correlated are they? Over the last 10 years, there's a high correlation, but only because the market has been manipulated by the central banks, which is actually their job. So when I say manipulated, I don't mean anything bad. I mean, that's what central banks do. Historically, let's say about 15 years ago, Kurt Worley, my good friend and at the time quantitative analyst, he did, I think he went back about 50 years, or as long as he could go back. I know he did 50 years on the oil research. But anyways, he did some serious research on the correlation between ADP and NFP. Because I asked him, I said, I hear on TV that there's a high correlation. So like what you're saying, if ADP is bad, then NFP is going to be bad. If ADP is really, really, really bad, then NFP is going to be really, really bad or really, really good, right? I said, is that actually true? So he went back and he did decades worth of research. There was no positive correlation, no negative correlation. There was just no correlation. You could have a horrific ADP and an awesome NFP. So I explained that at the beginning of the webinar. And that has to do with there are two different samples that we're studying. One is small and medium-sized businesses, and the other sample is all businesses. Okay? Oh, the drawing tool, Epic Pen. All right, so let me tackle this one other way. This area here is resistance and is a terrible place to buy. Okay. Okay. If you're up here, this is a terrible place to buy. Bulls that were buying down here should be, if they're doing their job, should be exiting the market up here, which could then give bears a short-term opportunity to sell. And then these bulls that bought here and bought here will probably buy by Tuesday or Wednesday of next week. Right on, John. So again, John, for the last 10 years, when every central bank on the planet is at zero interest rate policy and inflating money supply by trillions, the number one goal was to create jobs. And that's why over the last 10 years, there's been a high correlation. That is not a normal market. That is not. So like I've been trading long enough where to me that's just still new data. Now, if you've been trading only for 10 years or less, then you're like, it's always been that way. ADP and NFP have always been correlated. Well, where I come from, that's just new. That's just a new phenomenon. And as the markets get healthier and healthier, the correlation will break down. Okay. So John, it's just because I'm an old man. Okay, let's do it around the world, just kind of update ourselves. Still have about 20 minutes. WTI. This is why I line in the sand. If you're a bull, we're hoping this might work its way up. We need a hardcore reversal pattern and all that kind of stuff. That's what we talked about Monday, Tuesday, and Wednesday. Then we lost that line, so therefore I said I'm not interested as a bull. I'm neutral, not really looking. And I said this was actually disappointing for a bear, even though it dropped. Bears actually wanted it to rise into here. This was the proper sell zone. So on Monday I said if you're a bear, the best sell would be right about there. This should have gone up, and then it should have dropped. Okay? Because it fell first, it's out of position, and now it's going to come back and might actually come back harder. So if you're a bull, this is what you're looking for today, Monday, and then Tuesday, if you're a bull. I caution you because you're still going to need a big reversal pattern before it technically becomes bullish. Okay? And I think maybe bears are still going to try to sell it there, probably Wednesday of next week. What support and resistance tool is used? These are my pivot points. My pivot point indicator is available for free download. Charts.fxbootcamp.com. You got that, Sanjeev? Raymond says the Saudis are keeping the market at bay. I think it's actually the Russians. So Putin spoke about this yesterday, in fact. He said that Russia is much more content with low oil prices than Saudi Arabia. Also, Saudi Arabia is trying to gather consolidation amongst the OPEC members. Right? And they seem to have that. They're going to roll over the deals. But, you know, I think Russia's going to be an outlier in some of these. Which is another way of saying Russia needs the money. They're going to sell oil regardless of OPEC. Stave FX. So Stave is upset. Do these charts bother you guys? That bothers you? Like, these screens are $200 each. Am I saying something that is bothering? Like oh my God. Stave says it's. So Stave, I've been doing this one webinar for almost, what, 13 and a half years or 13 years? I've been trading a long time, my friend, so I'm not trying to prove anything to you. But I am trying to help. So if you can check the negativity at the door, that'd be great. Oops. Okay. All right, so let's go into gold. Let's go back into my typical setup. What do you think is going to happen today with USD and CAD? We'll go into that in a little bit. Okay, so you see how gold is out of position? So to me, gold is overvalued right now. Okay, so we knew in this period here that we were close to a top for gold. There's a weekly target and a monthly target, and this is actually an overlap, a confluence of weekly and monthly resistance. And that after this move, this is a logical, intelligent place to take profit. And since we hit that target, even though it was straight up for days and days and days, straight up, straight up, straight up, once we hit this area, you can see that it's gone into consolidation. Now, it may pop and do this, but I'm not going to predict it. I have the choice later, if it breaks out, I can buy a dip later, but I'm also assuming higher levels of risk, okay, with that. Okay. Does that make sense? So be cautious on this one. I don't really want to be a bull or a bear. It looks like it's trying to be bullish. Maybe NFP will change that. But if it's a bull, I'm going to have to let it break out and then just simply catch a pullback. If that makes sense. We can look at USD Swiss franc. You can see our trade plan, right, was to sell here and to exit here. So what do I do now if that trade plan is done? And that's the whole question of, you know, the extra level of risk. It's hard to answer that if the predicted move happened. Now what? Now I guess you're waiting for a counter trend back in, but typically that's short-lived and dangerous if you're a longer-term trader. Okay, the reason for it is how would a bear treat this? If they took profit now, they're going to want to try it again, aren't they? Okay, and meanwhile a bull is trying to catch this reversal pattern. So there's the double bottom, then a higher high, then a higher low. That's going to be your 1, 2, 3 reversal, right? That's the move. And you're going to look for something like this on Monday if you're a bull. Okay. We just did gold. Like 5 minutes ago, we did gold. All right, so how much time do we have? Let's go back to euro dollar. Although I don't like the euro dollar chart today. Let me try to explain the high volatility event-driven strategy. Do you guys think the euro dollar will be bullish or bearish after the news? Sanjeev, it's charts.fx bootcamp.com. Okay. All right. So when the news comes out, okay, I hope it's more down than up, but anyways, when the news comes out, the charts will kind of look like this. We'll watch it on a 1 minute chart, and all of a sudden the news will come out, and you'll have a situation like this, right? In that case, all we say to ourselves is, oh, I guess the market has determined that the results are bullish. Now think of it from this way. If you're a bull, are you supposed to buy low or buy high? Supposed to buy low. So at that point, once you say, oh, I guess the market reaction is bullish, you should look for a retracement. Okay? Typically, you're going to see something between the 50% and the 618. Okay? Typically. You can also look and see if there was any previous resistance. And if so, the new game plan, so to speak, is to let it drop somewhere between the 50 and 62. Could be a 382, depending on the situation. Could be a 786, but just roughly. Could be off of a roll reversal. But the general idea is you're trying to trade it back in the direction of the original move. You see? That's all we're trying to do. This is not, a strategic play. This is only based off of volatility. It's a high volatility event-driven strategy. So again, if the market determines, not you, you're not trading before the news. So the news comes out and boom, you see a bunch of green candles. The first thing you think is, oh, I guess we're bullish. The next part is you say to yourself, I need a pullback, and then I will buy the dip. That's all it is. And when you're done, you can put your stop here. Oops. You can put your stop here, or you can put your stop here. It doesn't really matter. If you lose more than 30 pips, you've royally screwed up, and it's impossible to lose more than that. Okay? So this is just news. Don't get this confused with fundamentals. We can always come back next week and digest what non-farm payrolls means and what the numbers mean and all that kind of stuff. We don't know why the market's going to react the way that it's going to react, because it's based on, all these, the volatility is generally based off of rebalancing of portfolios. So the assumption right now is the Fed's going to cut interest rates. So if this is a really good number, maybe there's no reason for the Fed to cut interest rates, and that could be devastating. Okay? Oh yeah, thank you. Let me bring up Trade the News. Okay? Of course, this whole thing is the same in reverse. If the initial move is bearish, then you'll wait a minute or 2 or 3 and it'll come back, and then you'll have a chance to sell a false rally. Okay? Now, here's the interesting thing. This will probably happen on a 1-minute chart, and then it'll probably repeat itself on a 5-minute chart. Baby doll, this is a scalp. It's on a 1-minute chart. So again, we'll follow it on a 1-minute chart, but you'll probably get another move on a 5-minute. Then once all of that has run its course, by the end of the webinar, we'll probably be looking for counter trend trades. Yeah, and Henry makes a good point. Don't blow up your trading account today. So if you don't know what you're doing, don't trade. Okay? Even if it's a demo, I don't care. Why would you want to practice trading poorly? So let me... Yeah, it won't let me open a new browser. Yeah, Windows is having problems today, huh? Strange, won't let me open a new browser. I can do it over here, though. Finally. Use FX Street. Adam, FX Street has a fantastic economic calendar. You should use that one. So, what, approximately 3 minutes or 1 minute? I don't have my proper clock on my other clocks. About 90 seconds, I guess, right?
Let's go Canada employment data at the same time. May employment change expected at 5,000 jobs. Unemployment expected to remain at 5.7% for Canada.
This is TradeTheNews.com. Remember, guys, visit TradersWay.com, open up a demo account, give us an opportunity to earn your loyalty and respect. You can also download my chart templates for free, and you can come to my daily webinars for free. Just open an account at TradersWay.com.
Chile reporting trade balance for May. Getting the employment data from the US and Canada out in just a few seconds. $75,000 for payrolls, below the $175,000 expected. Prior bias lowered to $224,000, $263,000. So sharp drop in the prior as well. Unemployment remaining at 3.6%. Hourly earnings 0.2% is 1/10 lower than expected on the hourly earnings year over year. 3.1% is also 1/10 lower than expected. Weekly hours at 34.4 is unchanged from prior and 1/10 lower than expected. Underemployment at 7.1% is a 2/10 drop from the prior. Canada, that change in employment 27.7 thousand, so well above the 5,000 expected for Canada. Unemployment dropping to 5.4% in Canada, 3/10 drop, which is unexpected. U.S. data change in private payrolls at 90,000, below the 174,000 expected. Prior bias lowered to 205,000, 236,000.
Wait for it.
And a big plug on the payrolls there, the birth death ratio plus 204,000.
Futures dropping on the payrolls miss. So tepid wage growth, the hourly earnings month-over-month and year-over-year 1/10 lower than expected for May.
So the closer we get to the counter trend, the harder it is to buy the dip.
Reiterating again that it's optimistic they can reach a deal with the U.S. Said this every day this week.
It's not quite there yet. So the dollar weakens with the idea that the Fed has room to cut interest rates. By room, I mean like, let's say, reason. Very slow reaction, though, in my humble opinion. Baby doll, that's not good. You're training yourself for disaster down the road.
Dollar weaker here post data, hold the euro back above the 113 handle, 113.10 trading.
So far, no pullback, which is fine by me. There's no opportunity to buy. So you're either disciplined or you're not disciplined. You can't be a little bit pregnant, and you can't be mostly disciplined. So the rules of engagement that we had going into the news was, well, I guess I can do it, right? Was this. You either do that or you do not do that. There is no try. No, it's not an issue of greed, it's an issue of discipline. Can you sell now? We are not at resistance, and nor is there a reversal pattern, so the answer to that is no. I mean, think about it. What's the basis of a sell? First of all, you have to be at resistance, right? If you're not at resistance, you can't sell. I mean, you just cannot. And then two, there should be a reversal pattern, right? So there's no resistance, and it hasn't reversed. Now, if it was at resistance and did this, sure, there's lots of places you can sell. You can sell the double top, the lower high, lower low roll reversal, lower high, lower low roll reversal, but we don't even have resistance. So the only play that is plausibly going to present itself is a down and an up. Okay? And then if you want to sell, and we're up here at the counter trend, that's where now you look for your reversal pattern and get short up there, because at least you have resistance. We're not at resistance right now. There's nothing. You got that, Wonga?
Fed Fund futures have seen the likelihood of 3 Fed rate cuts this year increasing, and the Fed Fund futures slightly rising after the employment data.
Did you guys see that India cut interest rates? Again?
Gold futures taking off up 0.5% now, 13.49 is 150.
Okay, just waiting. If it doesn't give you a setup, don't worry about it. What's the whole range here? 50 pips? It should have no bearing
equities
on your trading whatsoever.
Up about 0.9%, but near session lows or morning lows with WTI.
Victor says, look at resistance on the daily. Well, I'm not saying there isn't that kind of resistance. I'm talking about resistance now. Okay, so in general, Victor, this whole area is resistance in general. Okay, but more specifically, not in this moment. Okay, so for me to sell, I need to be up here. Okay, or there's another scenario. It collapses way down here, gives me 100%, and then comes back and hits this price and then drops. And then I'd sell that because that is also resistance. Okay? So the major lines for me, at the moment for resistance, the major ones are this one and this one. Okay? So I'm going to need a little bit more than just floating around the middle. It's not even a psychological level. So my scrutiny might be higher, okay? But I'm on a 1-minute chart, So I'm looking for finesse here. I'm looking for precision. Okay, so I'm looking for this if I'm a bear, or I'm looking for this if I'm a bear. Okay, that's all. The news source in the background is tradethenews.com. I've had a site license with them for probably close to 13 years. Okay. That's right, Allie. Be patient. Patience and discipline are probably the two most important skills you'll need as a trader. While we're waiting, do you guys have any questions about any particular type of strategy or tactic or fundamentals? Rob, I haven't read any details, so I don't really know, but it's a sign that the economy is not in a good situation. I suppose it's very similar to the Nixon taking the United States off the gold standard. The reason Nixon did it is that the United States didn't have any gold. They were screwed. Of course, no one will ever admit it, but Alex says he has less patience when trading large sizes. That's interesting. I find, yeah, if you move too quickly into big money, something does change. So the best way to work that in is to grow your account size slowly over time. But if you go from like $10,000 and then your uncle gives you $1 million, and your lot size goes from trading $10,000 at a time to suddenly you're trading $1 million, big lots, not 100K, but $1 million lots. It messes you up psychologically, and the best way to do that is to slowly grow that in there so you get used to it. Wow, so we haven't, typically we get the pullback in the first 3 minutes. No pullback, just sort of hanging out in no man's land. So I'm going to say the 1 minute scalp is dead, and I'm going to move to a 5 minute. Remember I said typically you'll see it on a 1 minute and then a 5 minute. 1 minute didn't materialize, okay? So if you're looking for a bullish trade, that's the plan. It's a little fat, don't you stink? Okay, or you let it rise and then we look for a counter. Which one do you want to do? Underjack asks a good question. How would you reconcile a first week trade indicating a short to M1 versus a monthly, I think you're saying M2 to M4, right? Well, the easiest way is the monthly should trump the weekly. Or you trade the weekly into the monthly. But typically I would say the monthly would the monthly takes precedence, right? So what Underjack is saying is, wait, right? Anyways, down is a short-term short into a long-term long. Okay. This being an M2, this being a CPP. But that's why bias is important, because depending on your bias, one of these two things you're going to ignore. Okay? One of them you're going to ignore. So if you're a bull, you're going to ignore this. And you're going to say, yeah, it's going to fall down to the M2, and then I'm going to buy this. Or vice versa. If you're a bear, you're going to sell here, and you're like, yeah, we're going to break through the M2. Right? So if you're not sure which one is which, and you're saying to reconcile, what that tells me is you may not have a bias. And you're not filtering your information. Okay? Now you say, well, Wayne, I'm a bear, but I really do think this is going up. Well, then when you get into that area, move your stop so that your worst case scenario is you break even or you make a little bit of money, and you try again the next month and the next month and the next month. So when you're trading from, let's say, a bigger point of view, a larger amount of time, if you're looking at your trading history over the course of a year, individual months end up not being that important individual months, right? As long as you're not losing money, right? You have to be able to trade properly. But if you think of it, what if you're only correct 7, right? By correct, I mean you decide you want to be a bear on a currency. And you have 2 months in a row that basically do not get you any decent trades at all. Okay? And in fact, many months. In fact, what if only 7 months out of 12 give you decent bearish trades? Well, you'll have 7 great months. Okay? And you'll have 5 months of mediocrity. Which means, let's define this. 2%, 7%. At the end of the year, you did very well. You see what I mean? What you're bringing to this market with that type of filter, Underjack, is your consistency brings, well, I guess consistency, right? Like the market is very inconsistent. It's up and down and down and up and up and down, and they're raising interest rates, they're lowering interest rates, all this kind of stuff. And then hyper news and hypersensitive to news. You, as a professional, are supposed to bring consistency to the inconsistent market. And when you do, your results will be great when your long-term consistent bias just happens to fit the flavor of the month. And then there are other times when the market changes. Oh my God, they're not going to raise interest rates. In fact, they're going to cut interest rates. Now they're going to cut interest rates, right? And the market's just like a chicken with its head cut off, running around, making a bloody mess. And in those months when your stable bias doesn't fit the flavor of the moment, you'll still probably do all right. You'll still sell at resistance. You'll still make money. You won't make great money because it'll come back and knock you out, or you'll break even and all that kind of stuff. But you know how to trade. It's very difficult to lose money selling at resistance in a downtrend, right? It's very difficult to lose money selling in a downtrend at resistance. And then you can sell at resistance in an uptrend, but it's there. If you do happen to get it right, because it's an uptrend and not a downtrend, you'll make some money, but not a lot, and all that kind of stuff. And at the end of the year, you'll say, well, I was correct. I was a bear, and 7 out of the 12 months were really good months, and the other months were, but you did your job. You sought opportunity, you managed the risk, and you have consistent returns. And your alpha matches the beta, which means based on risk-adjusted returns, I think a professional investor will feel confident in investing with you. Okay. So trade your bias weekly. Well, what I say is the first thing that matters to me is let me change this. Let me go. Okay. Okay. If you were a bull, the trade plan for June was this. There you go. You're done. That was the trade plan. Very, very, very simple. Now, the weekly trade plan, let me do in a different color. The weekly trade plan, if you're a bull, was this. And in there, there's also day trading plans as well. Okay? So what you're asking me, though, is what if you were what if you had bearish, but you were a bull? Okay? In that case, as a filter, you would say you're a bull, but this is a bearish setup, right? So how do you trade that? Do you short-term short and then long-term long? Well, what I would recommend is you stay a bull. So you say, well, this particular week, you want to buy somewhere in here. Did you get an opportunity? No. Okay? So you don't trade that at all. Then your next week this is your buy zone. For the next week, do you buy that? Heck yeah. Next week, where's your buy zone? Right here. Okay, so this one, no trade. This one, right? So this one, the first one, no trade. The second week, is there an opportunity? Next week, will there be an opportunity? Okay. And at some point, this is going to come back down, and you'll say, oh, look, I'm a bull, but the price action is turning bearish. So therefore, I should become more conservative. Does that make sense? And you say, oh, market conditions have changed. Has your long-term bias changed? No. But market conditions have changed. And you say, ooh, I should be conservative. All right, this might actually be a turn, which is good. I have to use this as a top now. Oops, sorry. I'm going to move that now. Okay. So the sweet spot, let me just move this one. That's not going to let me. All right, the new sweet spot, well, let's do it this way. Delete. And let's change the color. The new sweet spot, y'all, is this one. Now, there's no role reversal, so I don't like it as much. Okay, but this is potentially that 5-minute version of the volatility scalp. Okay, up into there. And this higher place, I'm still considering the counter trend. Simon says, have I ever played a musical instrument? Percussion, guitar, piano, and trombone. Wow, this is a slow one, huh? Now you can see why I don't give you the rah, let's trade, go, trade. The news came out, oh, boom, go, trade. Do you understand that? Where I tried to bring calm and focus. So like at our daily webinars, 90% of what we do is planning tomorrow's trades. Even though we meet in New York for the New York Open, I'm not planning today's trades. Why would I plan today's trades? You don't have a trade plan already? Like, gee whiz, right? So 90% of what we do is plan tomorrow's trades or next week's trades. Sanjeev says, what about divergence? Can you be more specific? What kind of divergence? There's lots of different kinds of divergence. You can send me feedback about the courses to wayne@fxbootcamp.com. We're constantly updating them. We actually are adding new ones right now. I drink coffee. I love coffee. I'm a coffee drinker. Back before the right before the financial crisis, so about 2006, I was about to start a tea company for a hobby. I was just kind of bored. I didn't want to golf, so I started a tea company. I got pretty close to launching it and then the global financial crisis melted on us, so I stopped that process. But I had prototypes for the packaging. I had sourced the tea from southern China. The women that worked in doing the tea and stuff for me, I had agreed to pay for lunches and education and all that kind of stuff. Like, I got pretty close to actually starting it. I was negotiating with Amazon to handle the warehousing, and then everything melted down and I stopped doing it. So I do like tea, but I am a coffee drinker. How do you join my daily webinar? Go to tradersway.com, open up a trading account. Even a demo account is fine. And there's a button in your back office called webinars or live webinars. That's how you do it. Well, hang on, guys. I'm waiting to see if this is going to give us our 5-minute in there. Good call. Yeah, this is a Jamaican Blue Mountain. Do you grind and brew your own coffee? Yes. Yeah, Jacques? Yeah, okay. We'll do that. Yeah, this is just hanging out there. Okay, let's do Jacques. because it's an interesting question. Okay. Okay, working from monthly to weekly on pound dollar as a bear. Okay, let me just make sure my charts are set properly. I'm going to reset them here. Okay, good. Okay, now the first thing is we're not at resistance. Okay, so the best course of action on the monthly basis is have it rise to this price and then sell it. Okay. The next opportunity is higher, but we're not going to get it. We're not even going to get that next week. So that would be 2 weeks from now. If it doesn't turn bearish, it's going to need another 2 weeks to go a little higher before it becomes bearish. And we're looking at this area here. Okay. So plan A is this. Look for a bearish reversal pattern here. And that could happen today or Monday-ish. Between now and Tuesday, you would get an opportunity to sell around that price. And if that doesn't happen, it's not going to happen next week. So it'd be at best the week after next week. And then maybe you'll get a reversal pattern up in here. Okay? Does that make sense? Exactly your plan. That's nice. Sanjeev, sir, whether the tool is free or having some charge. The tool is free. 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 Okay. Charts.fxbootcamp.com. 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 You can download all of this for free. Not just the indicators and stuff, but like all these profiles, free, included. Pivot points included. What? Okay. Ashan says that's exactly what I drink. Jamaican Blue Mountain. Yeah. It's hard to get it, but it's good, right? Jacques says the courses and coaching at FX Bootcamp is paying off. Right on, Jacques. Yeah, I mean, right? Ricardo's from Jamaica, yeah. And love Blue Mountain coffee, of course. Typically, the stop is placed around the R or the S. Is the U.S. in recession currently? Not even a little bit close, Lim. I tried to hire a company to come to my home and detail my car for me. It was going to be like $350 for them to detail my car. They're booked for an entire month in advance. That's the kind of economy we're in right now. Not even close to recession. Okay, let's take a look. Oh, and look what I put here, by the way, guys. This is on a different chart, but there's that pound dollar. So 3 weeks ago, I put on this chart, the pound dollar, that this orange line, okay, is the first opportunity to sell pound dollar. And it was so far in advance that I had put this on or before June 15th, 2019. So essentially what I had predicted with everyone, not predicted, what the charts told us when we were way down here, I think it was the vast majority of the down move was over, and that it would require at least 3 weeks to get up to this area in which the down move would resume. That's what we said back in here, May 23rd. And now it's what, the 7th of June? We have another week to go, and we're still not at the sell zone. You're welcome. Isn't that nice to have a 3-week advance notice? Right? You're welcome. Yeah, so I'm going to ignore that. This could actually be interesting. If you had to be a bear, this is a decent trade based on next week's trade. So this is actually setting up as a front run. What I mean by that is, if this drops now, I would hold short for next week's target. Okay, so let's quantify what that means. The oil would get down to just below 50, 49.75. Okay. So what I'm saying is, pachow. Well, let's delete that. What I'm saying is, pachow. Okay. And around 49.50, so this might be what I call an Arctic turtle. It might actually fall a little farther and then pop up. Okay. And I would look for the monthly counter trend to start between 49 and 49.50. Now we got to be careful. I'm not predicting reversals. I don't predict reversals. Okay. I'm a trend trader, so as far as I'm concerned, oil is going to fall forever. It's going to go all the way down to zero. Now, you might agree with me if I say, well, zero might be too much. Oil probably won't fall to worthless levels, literally worthless. Okay? It's probably worth more than zero. But as a trend trader, my attitude is it will fall forever until it does reverse. So I have to reiterate, I'm not predicting it's going to reverse up. Now, I am a bull on oil. So the first thing I'll recognize is even if I'm a bull in oil, this is a downward move. That is that. So my job isn't to predict a reversal. My job is to first find support. Right? Remember, we did this in reverse. We did this on a different thing, but we did it where it was resistance. So the first thing I need to find support. And then 2, I need to find reversal, a reversal pattern. Right? This is just like we did on a different currency pair. And then once I recognize the reversal, then 3, I'm going to buy a higher low. So what would that look like? Well, my first real line in the sand, let me update this now. Oh yeah, it won't let me update it, huh? Here we go. Okay, let's say the real line in the sand is this range between $49 and $49.50. Okay? That's sort of this area. Okay? So if I was a bull looking for a reversal pattern, I would ignore all reversal patterns. Let me say that again. I would ignore all reversal patterns until we can hit real support. You can't see that. So we'll call that real support. Then I would like to see, let's say, a double bottom, and then I would like to see a higher high, and then I'm going to set up buying a dip to the higher low. And now I'm hardcore, aggressive, ass-kicking bull. You see what I mean? But not until here. I have permission to trade the double bottom, but that's aggressive. Why is it aggressive? Because I'm buying a falling market. What kind of idiot does that? How was the wet track experience? Actually, the water actually added a lot to it. There was a big puddle in a fast turn, and you would sort of hydroplane a little bit, but it was all right because by the time you hit it, your foot was already off. It wasn't on the brake, and it wasn't on the gas when you went through that spot, and then you had to just sort of tap the brake into a turn, but you're already looking way left as you're making the turn. I'm way down the track already, visually. And then just as you came out of that, you had to gun it. And so I'm well past the puddle. So all that would happen in like about a second and a half, right? But so you'd come around the corner you'd remove remove your foot from the gas, tap the brake, then go into the water, off everything. Then there'd be a sort of a tap, and then gun it into the corner on the other side of the puddle, sorry. And it was nice because it was a up-speeding S-turn, and then once you went into a hairpin, so you'd go from, off everything, tap, gas, and you'd pick up through the S-turn, and then brake, right? And then you'd make that turn, and then you'd jam onto the gas again and into sort of a opposite kind of S-turn and back into the puddle. So it was interesting. It was fun. I just wanted more. It just wasn't enough. Deep says $50 is a support. Well, I have 49 to 49.50. So that might be good enough for you. You might just say $50, but whatever. So what I'm saying is, if you're shorting now, you're going to be in this all of next week. Well, not all of next week, until you hit next week's target. Look how much it's moved just since I've been doing the plan. So remember, I don't say things like, it's going to fall to 50. When people say that, it tells me they don't know how to do analysis. Why? Because it's psychological level? Okay, you're going to get lucky, but you're supposed to be an analyst, right? What does the chart tell you? My charts tell me that the conservative target is 49.90. The aggressive target next week is 49.75. And then the overall monthly target is just a lamb shake, right? Shake of a lamb's tail below it at 47.45. Or sorry, is it 47.45? 40. I guess I need to update my numbers. It's 47.45. Okay, so I'm not giving you opinions. This is what the charts say. So don't do things like, I think it will do this, I think it'll do that. Nobody cares. Okay? What do your charts say? Thank you, Kiss. Yeah, so euro dollars is hanging out doing nothing. So I'd say I'd even walk away from the 5-minute setup. Okay, the scalp is dead. So now all we have is the counter trend, which we have on a different. So that's all we got now. So let's take a look at that. Mark says, I'm a strong bear on the euro dollar. What should I be careful of? Should I just wait out? Yeah, the first opportunity is up here. Now, I can't see what that is. 113.40. Okay. So, by the way, we did all of this before the news even came out. Okay. So that's what you should be looking for. Either the double top, that was supposed to be black. Come on now. Either the double top is your entry, but even better, okay, the lower high. So you got the double top play or the lower high play. I prefer the lower high play. Okay. Yeah. So you just got to wait. Because even if it comes down now, what it's set up to do is still bullish. So even if it drops now, it's going to do this. So you got to wait until you're at resistance and then get a reversal pattern before you're not big enough to reverse this market. So you have to wait for the market to reverse. Cabby says, what does the weekly euro dollar tell me? I don't use weeklies. because they don't incorporate fundamentals. Okay? I don't use weekly charts because they don't include fundamentals. So you'll tell me, oh, well, based on what happened in 2011, I should worry about something now. 2011 didn't have trade wars. They didn't have Russia cheating on OPEC deals. They didn't have U.S. elections coming up next year. They didn't have the Reserve Bank of India or the Reserve Bank of Australia cutting interest rates, so on and so forth. Like, yes, they're technical, but I'm not a pure technical trader. I start everything with a fundamental bias. I have a degree from Harvard in macroeconomics, all right? I clearly like analyzing global markets, politically and economically. From that, I make a decision on which direction money will flow. Because at the end of the day, it's just business. It's only money, okay? Once I've made my decisions, then I use technical analysis to confirm or deny opportunities and adjust risk or even just analyze the risk. So for example, let's say I was also a bear on this, like Mark was. I could say, okay, I'm a bear on this, but I'm not going to sell these market conditions. Well, that's what technical analysis tells me. Now, the whole idea, if I agreed with Mark, or let's say Mark says, Mark is a bear on this. Okay, why? Why would Mark be a bear on this? Well, for whatever reason. Now, Mark might have been a bear on this because the U.S. had high interest rates relative to the rest of the world. And for a while back in this day, was expected to continue interest rates. And then around here, they were not expected to continue. Now they're expected to cut. So Mark might have to adjust his bias. But whatever. Mark could say, oh, based on 2% being earned in the United States, this market's down. Okay? So based on that knowledge, Mark wants to sell. Cool, that's great. Love it. I may or may not agree with it, but I get the idea that there's some bearishness here. So now you use technical analysis to say, is this a good opportunity? Not even opportunity, let's be more precise. Is this a good price to sell? What else does technical analysis tell you? Is this a good time to sell? So your charts only cover time and price. Okay, so that's why someone that says open up your weekly chart, you'll see that this is resistance going back to 2008. I don't care. That's not what I'm trading. I can find much more relevant information on smaller time frames. Now, I'm not completely dissing the weekly because whatever's on your weekly, I'll probably find something similar on the daily and the 4 hour. But what a lot of people do is they look at the weekly and they say, because of this price in of itself, price contains all information and all that kind of stuff. Yeah, if you're lagging, but I'm leading. So, right? So in that case, I only use my charts to answer two questions. Is this the right time to consider selling? And is this the right price to consider selling? And yeah, I might find that data on the weekly chart, but I'm also going to find it on the daily and 4 hour. I don't need to look at the weekly because I already have all that, okay? But if you look at the weekly to make decisions, you're throwing out more relevant information based on current market conditions, okay? And I think ultimately you'll find that most of the time they're very similar. All right, so let's say now I'm like Mark. I've analyzed this. I'm a bear. Okay, great. Is this the right time to sell? No, not really. Is this the right price to maybe sell? No, I'd like to sell it a little bit higher. Okay? So I'm thinking maybe here. Okay? And look, this might take a whole week to set up. So Kiss Drift said, I made the mistake of selling gold. Well, you sold in an uptrend. So is there any chance of it going to, I'm not going to answer that. Why are you selling an uptrend is your bigger question. What kind of person sells an uptrend? Answer that question for yourself, and you'll probably stay out of bad to mediocre trades in the future. And by the way, there's no hope, right? There's no hope in Forex. Okay. John says, I have a question. If you do not use weekly or monthly time frames, why do you swing trade religiously based on those pivots? Now, I said I don't use the weekly chart. I don't use monthly charts. I use 4-hour charts to plan out my monthly. I use my 4-hour chart to plan out my weekly. I even use my 4-hour chart to plan out my daily. Okay? But the bigger, what I'm saying is instead of using weekly technical analysis, I replace weekly, that means weekly candles. Okay? What I mean is I don't look at this chart. I don't say, oh, the weekly 55 EMA or something. Instead of using that chart here, I do fundamental analysis. I study central banking policy, macro theory, and all that kind of stuff, right? And from that, I create a bias of bull or a bear. I do not use a weekly chart to say, should I be a bull or a bear? Okay? I don't care so much. Okay? Now, I'm not saying it's not important. I'm just saying most likely you're using a weekly chart to substitute for not having a fundamental bias. Now, my fundamental bias tells me what's going to happen next month, next week, and all that kind of stuff, probably ahead of this. Okay? So just put it that way. I'm not using weekly candlesticks to make long-term biases. I use fundamental analysis to create long-term biases. So that's called strategy. So if I already know I'm a euro-dollar bear because the ECB is going to reintroduce quantitative easing, and that will weaken the euro. Let's say that was my, right? So now I know I'm a bear on this. And if that's the case, I don't need this weekly chart. I'm already a bear. What could I possibly gain? Okay? So now I just sit and I wait. Is this a good opportunity to sell right now? No. Why not? Well, that's technical analysis. I have up, 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 down, down, buy. 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 Up, 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 up. What do you think's going to happen next? Down, down, buy. But now if it doesn't make a higher high and instead goes down, 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 now what's the next move? Up, up, sell. Okay? So I'm not saying the weekly candles are useless. I'm saying I don't use weekly candles because instead I use fundamental analysis. Whatever you need to do to create a strategy point of view, which is long-term point of view, I'm fine with. That's fine. So I think we're saying something, we're kind of getting to the same, right? I think we're getting to the same point. If you have the strategy, whatever you use for the strategy is completely acceptable. I'm saying I don't use weekly candles because I already have a strategy. By strategy, I mean I know my bias. I'm a bull or I'm a bear or I'm neutral. So with the Fed cutting interest rates and the ECB adding quantitative easing, I'm actually quite neutral. Okay? But whatever. But if I was a bear, I already know, and I don't need a weekly. I just don't. It wouldn't add any additional value for me. You'll say, well, Wayne, this is monthly candle resistance. Yeah, but I already know it's weekly as well, so it wouldn't matter. It doesn't change anything. It's a confluence. Yeah, but I'm going to short it anyways. I don't need 19 reasons to sell, right? So I'm either looking to sell in here or not. Okay? James says he likes the weekly 5 EMA. Cool. Okay. Yeah, so I'm looking at the price line here and stuff. Yeah, it's all the same. I think we'd end up doing, and this is, by the way, this is totally normal. We could end up doing the same thing for different reasons, but what I kind of think is it's our own personal interpretation of the data. These are very complicated matters that we're analyzing. There's so many variables affecting this that some could even argue the human brain isn't even capable of it, right? But what will probably happen is we'll end up doing the same thing for slightly different reasons, but I think if we added it all into a giant machine, it'd be the same. Well, yeah, no, but see, I don't think so, in my opinion, John, right? I don't, right? So this is an entry irregardless of what happens on a weekly. Okay, and by the way, this is one weekly candle, right? So let's say I'm going to buy something. Oops, I didn't mean to make it that bad. Hang on, let me see if I can clean that up. Okay, okay. This is a one weekly candle. Now, let's say in a basic strategy, if that's a bullish engulfing candle, I'm going to want to buy the next one somewhere between the 382 and 618 Fibonacci retracement, right? So I would still end up trading that. Come on. Okay. So one of the things I've been saying forever and ever and ever and ever and ever and ever and ever, John, is like I scalp into my spots, I scalp into my swings. Okay. Well, Mark says, why do you say it's an entry regardless? If you're a bear and you're at resistance and you see a reversal pattern, does it matter what time frame the resistance is on? Resistance is resistance. Okay? So when it comes down to like swing trade planning, for example, if you're a bull, this is the entry, this is the exit. Very, very easy and defined. So now the only thing is, do enough bulls exit this? If we get enough bulls, you're going to see a change in trend, and you'll trade it. We know it's resistance. We know that's a take profit zone. So what if you said, well, there's a monthly candle resistance here. I'll say, okay, I'm still going to sell it, right? Like, I have enough information. Okay. How do I enter a market position? Do I enter all at once, or do I scale in, scale out? I used to jokingly say that scaling is for fishermen, right? But it depends. So it comes down to what you mean by a position. So obviously, if I'm scalping or even spot trading, I'm going to put the full Monty on, right? In and out, predefined trades. Those are all income-based trades. By income, I mean I'm in the trade for a few minutes to a few hours, maybe even for a day. Anything beyond a day, I'm not in it just for income. They're wealth-based positions. Okay? And I'm trying to build large positions. And in that case, I will tiptoe in based on price action. Okay? So for that, I'm also going to need a bit of seasonality. So this time of year, I'm not typically, this volatility we've had over the last 4 weeks. In the news, you're hearing about things like, oh my God, it's the trade war. Oh my God, it's the Fed signaling. Oh my God, it's all this stuff. I believe in reality, it's simply people rebalancing their positions before going into summer holidays. So this is typically where you unwind positions. And they're not even big positions because this isn't typically an expansion phase of the annual business cycle, so to speak. So over the summer, right, it's more like July, I start to try to build positions. Now, these are wealth positions, not, right? Income, you're just trying to make money today. But that's like having a job. You work a few hours, you make a few pips, then you stop working and you stop making pips. Wealth, right? Wealthy people don't work. Their money works for them. You understand the difference? You might make $500 or $500,000 a year working for Goldman Sachs. If you have a job, you're poor. If you go to work to earn money, you are poor. I don't care. The volume of it doesn't matter. Okay? Now, if you make $500,000 a year doing nothing, if you sleep for a living and still make $500,000 a year, you're either a prostitute, but more likely your money is working for you. You own real estate, you own bonds, you own whatever. No matter what you do, money rains on you, right? That means you're wealthy. When your money makes you more money, and you don't have to go to work, you don't have to dig a hole in the ground or punch a clock, okay? There's a difference. So in July, I typically have a clean slate, and I start to build positions where I'll say, okay, I want to be a bull. Am I at support? Yes or no? And I'm like, yeah, okay. Am I going to get a bullish technical setup? Like let's say a 1, 2, 3 pattern or whatever. If I do at that support, then I buy, I move my stop to break even, and it should go up. Okay, and in the summer it doesn't go up very quickly, but it could. So anyways, it goes up, and then the next day I try it again, and the next day I try it again. Each time I'm moving a stop and I'm managing them individually, and I try again, and I try again, and again, and again. I have no limit order. I have no target. I only have stop losses to help me manage the risk per trade, but I'm mentally entering positions. not trades, positions. I'm building a position. Now, the nice thing about this is you have to put it together in such a way that you're earning income on top of these positions, which means 7 days a week, you're earning interest payments. You're collecting interest payments. I think of it like a bond. I'm like a bond trader where I buy a bond. The bond can go up and down in value. The value of the paper could go up and down in value day in and day out, hour by hour. But I'm guaranteed to collect interest payments. Now, a coupon payment for a bond is typically twice a year. An interest payment on a currency position is every single day. That wealth gets added to my account. Okay? I have positions on right now that have been open for just about a year. Every day I collect interest. Okay? So, the target now for building positions is not based on price, it's based on a calendar. It's not price, it's time. Okay? And the idea is as your positions go up, you move your stops. Let's say break even, break even, break even. And if the market comes tumbling down a few hundred pips, and it happens all the time, some of your positions will get knocked out, which means every day you have to try again, add another one. And let's say 2 out of 3 get knocked out at break even. Well, you're still collecting interest payments while it's open. It's not much, but it's something. Or maybe you're locking in 25 or 50 pips per trade just to kind of pay for your risk and your time. That's all up to choice. But the idea is maybe for every 3 trades, it might be a week or 2 or 3 or 5, but there's always a retracement. And let's say 2 of the 3 get knocked out for whatever, your small profits, and you collect your small interest payments. But by the time months go by, you have 10 or 20 positions open. Okay? Eventually, and that's on one particular currency. Now, you're doing this multiple times a day, every single day on multiple currencies. So I've been in positions where I've had like 110, 120, 130 open trades. Okay? With 98% margin available, which means they're all profitable trades. 98% of them. And the couple of the young ones haven't decided if they're going to work out or not, right? And what does that also tell you? It doesn't tell you I'm a perfect trader. Okay? What it does say is that when my trades are losers, I take small losses. But when my trades are winners, I let them run. So it doesn't mean like out of 100 trades, if I have 98% available margin, that I had 98 out of 100 winners, and this means I'm the world's greatest trader, and I'm correct, I'm right 98% of the time. No. That's not what that means. You're misinterpreting what I'm saying. What I'm saying is when the trades don't work out, I exit for a small loss. But when they are working out, I let them run. That's the message. And then on top of that, the bigger message is there's seasonality behind that. There's trade planning behind that. There's fundamental bias behind that. And then other types of the year, I'm not trying to do that. I'm trying to do other things. So if you watch like the FX Street interview, I did like a 1-hour interview, I think 2 or 3 years ago. I was at the Caribbean. I just met with I was on my way to meet the central bank in the Caribbean. And I did a 1-hour interview with FX Street, and I'm talking about all of this in great detail, that I'm in lots and lots of trades. I've been in them for months, and I'm about to dump the whole thing like in any day, and I'm not just dumping, but I'm reversing. I'm going to sell, even though I've been buying for months and months and months and months. I say in the interview, I'm about to exit and now short everything. And I explained why, week by week by week, that it would fall for about 3 or 4 weeks, then there'd be a false rally, and I'd dump it some more, and I get very, very specific. But I've been trading like this for years. Now, the consistency helps me plan. Now, if you go back and you go, let's say, try to back test what I'm saying, some years are amazing. Other years are very mediocre. Like maybe 3 or 4 of the currency pairs worked out, but like the other 10 did not. And then there are a few years where it just didn't work out at all. But you'll see, like, some years it didn't work out at all. More years worked out okay, and some years have been fantastic. But isn't that what normal markets do? And if you are the one that provides the consistency, like I said, based on risk-adjusted performance, when you compare the alpha to the beta, there should be congruency. And if the markets performed poorly, my positions probably well, you can't perform poorly. Like, you still bought, you still put in stops, you still manage the risk, but like, you didn't have a banner year, like you didn't have the kick butt year. But then you analyze the beta and you're like, well, you shouldn't have had a kick butt year because it was a very not good year at all, but you did better than the benchmark, if there is such a thing, right? And other years were pretty good. Those are pretty good years, and some years were great. But the alpha matches the beta, and that's why institutional investors or professional investors, they look at these things, okay? And they'll say, oh, Wayne, that makes sense. You had a great year, but boy, the markets were great. I'm like, yeah. So based on, the reason they do that is they say, well, Wayne, why did you have such a great year? It's not a question, in fact. It's already understood. Wayne had a great year because the markets had a great year. Or Wayne had a mediocre year because the markets were mediocre. The alpha matches the beta. Now, if I had a great year and it was mediocre, you better be able to explain why. And you'll say, well, I found a few gems amongst the coal. There was a couple of diamonds here, a couple of rubies, but most of it was just coal. And therefore, what happened was we let those run, or I was able to add to them, or, some central bank made a mistake or whatever it was. But there should be a good reason, because an investor will now really scrutinize those years, your good years when the beta was mediocre, because most of the time a trader will cheat and they'll have a great year by increasing risk. And that is death to a professional trader. Death. Because your institutional investor will come in and say, oh my God, you're gambling with our money. Goodbye. Okay? I spoke in November. I spoke in November, 2 institutional investors. One managed 60 billion. The other one managed about 30 billion. They spend most of their days analyzing traders. This is the kind of thing they do. They sit down with hedge funds. They get the investor presentation. Then they get, right? So now they understand the strategy. Then they're like, good, give us your trade history, your performance, right? They go through and they start looking at it, and they're looking at it like, what did you do here? What did you do there? What about this? Ooh, Look at that month. Tell us about that month. Tell us about that year. How did you achieve that? Right? So if the stock market, let's say, is up 30% and you're up 100%, how'd you do it? Well, first of all, you say it's a banner year. And with the stock market up, this was all influenced by central banks and money supply. Just so happens Forex offers us leverage and such a thing. And great. But what if you're up 100%, but the stock market was flat? How'd you do it? Usually over leverage, over trading, all that kind of stuff, right? And they're going to look at that and say, well, congratulations on your good year. We're not going to invest. Good luck. And they're not upset about it. They got probably, let's say, every day they meet with a hedge fund. So they can totally afford to say, well, that's really good. You have good results. That's really fine. We're not really interested. Thank you. One thing that shocked me, though, is how aggressive these guys were with that kind of money. I was really surprised. Really surprised. They took a lot of risk. The vast majority of their money was in alternative investments. Really shocking. Do you know what kind of returns that investor is looking for? If you can prove to them with very low leverage, very low risk, maybe you have no leverage at all, I don't know. If you can produce 12% a year for them, they'll invest. But it has to be year after year after year, low risk, low volatility, and when market conditions change, you're really fast on adjusting. So if you're like a long-only equity firm, you're going to have problems because, what do you do when the stock market's down? Are you still going to earn 12%? Well, how are you going to earn 12% if the stock market's down? So they like currency traders, right? Because you're liquid. So the other thing is, what if you're an alternative asset and you buy diamonds, or you buy real estate, or you buy, private equity type deals? You're liquid. So you're like, well, we can't get out of this position in a down market. So if you can explain to these guys, that you're liquid, so you'll make 12% when the market's up, but you'll also make 12% when the market's down, they'll be very interested. Okay? No, Raymond, you're not compounding. We're talking like 1 to 1.5% per month. But you have to do it every month, month after month. Okay? In all market conditions. Right? And they might test you on 100M. And then give you more, and give you more, and give you more. Right? But you better reject that small stack and no, we don't accept 100M. Can't accept 100M from a 60B investor. It's a test. If you accept it, they'll back out. But anyways, look at this euro dollar, nothing. Okay, lots of questions about USD kitty cat. We can take a look at that. Reb says 130 open trades, can't wait till I get there. Well, just imagine, so you can do this for yourself, Reb, on a demo account. Starting in July or August, every trade you take has a stop and no limit. See if you can do it. So if you're making, let's say you make 12 trades a day. First of all, make sure you're earning interest. Okay? Make sure you're earning interest. Not, right? If you trade the wrong way, you're going to get charged interest, and you're missing the whole point of earning income on, right? Your wealth generation. What I mean by wealth generation, guys, if I wasn't clear, is let's say, so I've been in trades for about a year. They're still open, right? So imagine, like, you wake up in the morning, you check your open positions, and on average, your trades are up 50 pips each for the night, since last night. Okay? That's pretty normal, right? Whatever. The market moved overnight by 50 pips each. But you're in 10 trades. So you wake up and you're like, oh, I guess I'm going to check my trades. And you open up your account and you're like, oh, I'm up 500 pips for the day. That was good. You see my point? And on top of that, those 10 trades earned interest. Okay? Now, if you add them up, 10 trades with interest might be like a total of like 20 pips. Okay? And you're like, that's not a lot of pips. But over the course of a year, right? It adds up. 20 pips a day times 365. Okay? You're going to make guaranteed 6,000 pips a year. Huh. Well, that ain't bad. So you got to think big. You got to think long term. You got to think like an institution. Okay? So you're like, oh, wow, 6,000 pips, that's more than I make trading. Well, I know, that's the point. Okay? So 20 pips a day times 5 days, 200 pips a week, right? Well, no. Over, that's 100 pips a week, right? 20 pips a day times 5, 100 pips a week, 400 pips a month, 4,800 pips a year, so 5,000 pips. So you're guaranteed to make 5,000 pips a year on those 10 trades. You see what I mean? Plus whatever pips you actually make, which could easily be another 5,000 pips. That's all I'm saying. Now, sometimes if you're trading exotics, your interest payments are a lot more than that. A lot. There are trades, like maybe you should look up like Euro Turkish Lira, where you're earning like 1,000 pips. No, it's not. Sorry, not 1,000 pips. 1,000% a year in interest payments. Have you thought about that? Can you go to the bond market and say, I'm going to buy a bond that pays me 1,000%? What would you do? What would happen if you went to a bond trader and you're like, well, I'm looking for a bond. I'm pretty conservative, so I want it to pay me 100% a month. Or not a month, sorry, 100% a year. It's difficult to find something that even pays you 10% a year. But in Forex, we have an opportunity, like institutional investors. Google John Taylor, FX Concepts. Okay? Google, I think I can type it in here. John. I can't type because I got this. Oh, I know what I can do. If I go here, I can type. Okay, type this. Oh, my caps are on. No wonder. Okay, John Taylor. Taylor? I think it's Taylor. FX Concepts. Okay. He used to pay himself $150 million a year salary. Oops, wrong one. $150 million a year salary. And they tried not to make pips. They only tried to make interest. So now, during the financial crisis of 2008 and stuff, all their clients pulled their money, not because they were losing money, but because their clients were losing money everywhere else, and they were just redeeming all their cash. Right? And so anyways, FX Concepts, after like 30 years of being in business, got redeemed to death. But up until that point, their number one goal was basically to earn income on their currencies. The reason this is powerful is because in a bond market, you invest $10,000 in a bond, and the coupon payment might be 3%. So twice a year, you'll get half of the 3%. And then at the end of the maturity of the bond, let's say it's 1 year or 5 years or whatever, at the end of the period, you get your $10,000 back. That's how a bond works. In Forex, I can lend Turkey some euros. It's very similar to buying a bond. I can lend the country, Turkey, euros. Okay? But imagine now, I'm only putting up collateral. So let's say I'm going to lend them $10,000. Well, depending on leverage, you don't need $10,000. How much money do you need to trade $10,000 trading Forex? Well, at 10 to 1, I only need $1,000. At 100 to 1, I only need $100. Okay, $100, and I lend Turkey money. Now, Turkey might be paying me 12%, but 12% of $10,000. What's 12% of 10,000? 1,200. So now I'm going to earn $1,200 per year in interest payments. I only put up $100. I'm going to collect $1,200 in interest payments from Turkey, and I only ponied up $100. That's how Forex works on an institutional level. Holy smokes. Now, don't you wish you ponied up like $1 billion? The trick is moving your stop to protect your risk. Okay? And then never getting out, ever. Ever. Sit on it forever. And if you get knocked out, you get your money back, just like a bond. Now, the interesting thing is, if interest rates go up while you're holding a bond, you do not get an increase. You're locked in at that whatever rate is set printed on the face of the bond. In Forex, if Turkey raises interest rates from 12 to 15, I earn even more money. But I suppose it's true if they cut interest rates, I earn less money. Okay? But think like, I hope, let's put it that way. I'm just checking the timer. I just want you to look at Forex from a different point of view, just a different angle. Because someone said things change when you get bigger money, right? Well, what if you had $60 billion? Or even, you know, one guy had 60, the other one was a woman actually, and she managed $30 billion. Nice, right? Now, the interesting thing is, I went through the numbers with them and went over a risk model with them, and they thought it was brilliant. So anyways, good. Things do change when you have big money. You don't want to piss around scalping for 20 pips when you're managing big money, right? Yeah, I'm still short that one, Raymond. Okay. Things do change when you have bigger money. You're not going to piss around with a little 25 or 30 pip trade. Imagine now you had a business model based on patience and discipline, analyzing central banks' monetary policy on a global level, and then using technical analysis to slowly enter positions. What if you decided you might be in these positions not for minutes or hours or days or weeks? What if you expect to be in these trades for 10 years? Have you ever considered that? What if you never get out? What if you're earning 1,000% a year in interest payments, and after being in the trade for 4 years, you're up 8,000 pips? Now, here's where the model breaks down. You'll have so much money, pip-wise, that you won't be able to do it. Even though you're guaranteed to make 1,000% a year, you're just not going to be able to do it because you'll make 40,000% on pips. And you'll just say, oh my God, I just can't do it. I can't do it. I just can't. You're going to fold. I've been doing like, I can't sleep at night. Oh, I can't do it. What should I do? I got to get out. Oh, I got to get out, right? And you just like, you wake up, you're like, I got to take profit, and you get out. It's because you have too much profit, and you just like, I know I'm making 1,000% a year on this. I can't. I have to take the pips. Okay. Cliff says, by Cliff I mean CV. Hey, CV. Wayne, so the smart money already price sold US dollars before today. Maybe. Okay. Now the retail is going to sell, creating, assuming that. Yeah, well, it's like one of these things. Like if you were going to sell the USD CAD. Okay, what did I put in my book? Right? I wrote my book 12 years ago. So 12 years ago, when I was teaching people strategic and tactical Forex trading, and I said, if you were going to create a top of a market, it would be at this exact price. And that exact price is this price right here. Oops, hang on, let me redo it. Delete. And let me change it there, and I'll make it black. Okay, I would say right there. Okay, that's what I put in my book 12 years ago. Now, by the way, I'm not pitching the book. I'm trying to say that it's so straightforward that it certainly was planned by market participants. That this is not a random walk. That's the message I'm getting, that I'm giving here, okay? That it is absolutely, totally plannable. by an institutional investor to say, all right, the Fed's going to cut interest rates, therefore I think we're going to need to get short, so let's take a look at where we're going to go, and that's the price right there, whatever that is. Okay? Now, put this in your pipe and smoke it. Do you know what the planned target was for that same institutional investor? Sell here, exit here. Oh, thank you, John. Okay. Thank you, Hoodoo. You see that? So are institutional investors trading this? And by the way, if what I've drawn right here doesn't make any sense to you, you're like, you don't even know what I'm talking about, go to fxbootcamp.com, take a course. Take them all. Okay? This is telling you, by the way, I knew this price before it was printed. Okay? This is the exact price a bear would sell, and this is the exact price a bear is likely to take profit. Okay? If you don't know what this is, you're missing the entire way the foreign exchange market works. So someone said they're stuck on 1 hour harmonic patterns. You're stuck on a tool. Okay? It's like you figured out how a screwdriver works, but you have no idea about how to build a house. None. And you're in the house building business. So you have a cool tool. It does a really good job of doing the one thing it does. If you put the right screwdriver on the right screw and you twist with force, it puts screws into whatever medium you're working with, right? Great. But you don't know how to engineer and design and build a house. You have to know some physics and some geometry and some math and all that kind of stuff. There's something much, much, much bigger than your 1 hour harmonics. So I'm not poo-pooing on your 1 hour harmonics, but there's a lot more going on than that. And you will not be able to build a career of trading just knowing 1 hour harmonics. It doesn't tell you what's going to happen all month, right? So like if you sold here, imagine your conviction all month. You're selling every rally that presents itself. And now, guess what? Stop trading. You're done. You're done. Well, what if it falls further? Well, what do you care? Stop trading. MoveOn.com. The trade plan is done. Anything farther down than that is risky. It's risky. It's unlikely, but it happens. And it happened even last month in some currencies. But you'll find that when you get down there, this is when the markets get a little choppy, where it's down for 2 days, it's up for 4 days, and it's back down for 3 days. You're like, what the heck is going on here? And some of my daily pivots aren't working, and some of the price action's not working. Like, what the heck's going on? Well, you're trading in a bad market. Remember, I told you earlier today, look at your trading as if it was an entire year. If you just nailed this trade and you skip the next 2 or 3 weeks while the mediocre trades present itself, what will you see at the end of the year? Nothing. No one will even notice you went 2 weeks without trading. And then if they did, you say, well, why did you stop trading for 2 weeks? And you're like, well, I didn't like the market conditions. They didn't suit my taste. See, I'm patient, I'm disciplined, I'm conservative. And down there was too much risk associated with trading. So I made the easy money. I grabbed the low-hanging fruit. And when risk increased, I walked away. Why? Because I'm patient and disciplined, and I don't gamble with your money. And your client's going to say, dang, boy, I like you. Right? That's your client. Mm-hmm. I like the way you trade. Mm-hmm. That's your client. And what do other people do? They don't know. They just don't know, right? So they'll just be trading along. One trade is as good as the other. It's all the same. Blah, 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 blah. Trade, trade, trade. 15-minute chart to death. Make 50 pips today, lose 70 pips tomorrow. It's all in your mindset. That's right. You're either the boss or you're not the boss. Remember, people don't pay you money to trade. And don't get confused, like if you make a lot of money trading, don't confuse that with attracting investors. That's not why people invest in you. Because you make a lot of money now and then you'll lose it all later. Every investor's seen it before. Like, you're not fooling anybody. People pay you money because you're an expert. So they'll sit down with you and they say, yeah, okay, you know, I have a business. We do a lot of business in Europe, and I'm worried about the value of the euro versus the dollar. And we typically do, you know, have 3-month contracts between signing a deal and collecting payment. So how can you help us? I'll say, well, first of all, let's talk about what's likely to happen with the euro dollar over the next 6 to 12 months. And then you can tell me more about your business cycle or your expected business opportunities during that time period. Now, first of all, there are two players when it comes down to the value of the euro and the dollar. That would be the European Central Bank and the Federal Reserve Bank of the United States. So let me spend about 5 minutes talking about the recent history of these two central banks, and then more of like what's going to happen, the new policies that are most likely to be put into effect by these central banks, and how that is likely to affect the valuation of the two currencies. And then we'll get to know more about how much and when your euro deals will come to the market, and we can talk about strategies based on those particular timing. Okay, great. And then you go into your presentation, and all of a sudden, boom, done. You got yourself a client. But if you sit down and you're like, I really don't know what's going to happen tomorrow. I basically I open up a 15-minute chart. I like to be in trades for 15 minutes at a time. I pick up 50 pips here or there. I have a $10,000 account and I'm trading $10,000 positions, right? It just doesn't work that way. So you got to be bigger. I would train myself. So you have to remember, before I was a Forex trader, I was a venture capitalist. So I already sort of have an institutional point of view. I'm a business person. I'm a businessman, right? I'm not a businessman. I'm a businessman. So I bring that attitude to Forex right away. And someone said it's all in the mindset, right? Oh, Zhao said it's all in the mindset. It is. Do you want to be a better amateur trader where you're trying to get 30 or 40 pips at a time instead of 20 or 30? Or do you want to be an emerging institutional trader? And therefore, you got to get your mindset of macroeconomics, central banking policy, having a fundamental bias, entering, using technical analysis to define the price and the time of your entries, and then managing your risk, and then finding a way to keep your winners or your losers small and letting your winners run, right? All those things are where you need to train yourself. And yes, it is a mental thing, okay? It's very much a mental thing. You need to train yourself to be an institutional investor or trader if you want to make big money one day. It might take you 10 years, okay? So, Stans Flux says 0.02 for every $100 I have in. Well, I used to have a rule: one mini lot for every $100,000 in cash. So you're more leveraged than I am, but yet we may have different trading styles as well, right? So if you only made, let's say, 2 trades a day, you would probably have larger lot sizes than I would. But I might make 12 to 20 trades a day, but at smaller lot sizes per trade relative to the cash. Okay? But you said 0.02 for every 100. So I'm trying to convert that to bigger numbers per 100. Yeah. So, but anyways, you're higher leverage than me. But I spread it out. Okay, I spread it out. I don't just do one trade and put all my eggs there. I go boom, 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 boom. Right? So I look for congruency. Let's say all the yen pairs are falling. Bum, 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 bum. I bet on every horse. Where you might just sell CAD yen, I'll sell pound yen, euro yen, CAD yen, Kiwi yen, Aussie yen. I'll probably not trade USD yen. Okay? And then once I get those going, then I'll probably sell pound Swissy, euro Swissy, probably skip USD Swissy, right? Aussie Swissy, Kiwi Swissy. Okay? And then I'll move that aside and I'll say, okay, that one position, to me, that's all one trade. I'll move that across. Now, do I just blindly do it? No, that might take me a whole day. You see what I mean? That might take me a whole day where I finally get all my Swissy trades and I finally get all my yen trades. And I get them all set and I got all my stops managed, and that's great. And I expect to be in them for a few days, but maybe even the month, depending on the setup. And then I'll move over and I'll isolate the dollar and say, okay, I got that one risk-off trade going. What should I do with the dollar? Should I kind of go daily now against these weeklies to try to hedge it? Or do I see other opportunities? Do I see congruency? Maybe this isn't a dollar move. And I start analyzing that reserve currency separate from the others. So all those first 8 trades might just be risk off. And I'm done with that after 2 or 3 days of trading risk off. I got all my stops at break even. I'm done. And then I'll isolate the dollar and start setting up a new trade. Okay. Argentina, love Argentina. Man, I got to go visit Argentina. I have a very good friend in Argentina, and he's in crypto now. Got to go visit him. Got to drink the wine. Got to eat the beef. Got to play some polo. So only one more year of Harvard. Once I got that second degree done, I was thinking about doing like a world tour and go hang out with everybody, the whole Forex planet. I want to go everywhere. meet up with people. I even thought about it today. But I can't do it till like 2021. All right. Where did I have the counter trend? Here. Oh, nice. Thank you. I guess we'll wrap it up here, right? Oh, yeah. Well, I only have 30 seconds left. How nice is that, huh? So I put this before the news came out. And now here we are. There was no entry. So there was no long scalp. Can't get rid of that thing. By the way, this is me in the Harvard Club. I don't know if you can see that. Probably not. I'm not sure if it posted. So anyways, this is the moment of truth. What you're looking for if you're already a bear on the euro dollar. This doesn't tell you to be a euro dollar bear. That comes from different sources of information. But if you want to be a bear, or if you're already a bear, you're looking for reversal patterns now. Okay? And by the way, this would be a dumb place to buy it. Yes, I'm definitely, I like Portland actually. I haven't been to Portland in a long time, but I used to do a lot of stuff there. And in Portugal, gotta go to Portugal. I love me in Portugal. Never visited, been to Spain, but not Portugal. And I have a lot of Forex friends in Portugal. So I definitely would go there. I was thinking, I like Singapore and I like Hong Kong. So, and I was trying to think, like, if I did a Forex thing there, excuse me, would I do it in Singapore and Hong Kong? And the only answer I could think of was yes. Jacques says we've opened out a position. Are we not broken it, right? So yeah, so basically you still have to wait, right, Jacques, and plan it. So you need a reversal pattern. What is your favorite reversal pattern? Would you recognize a reversal pattern if you saw it? Actually, you know what? I'd like to visit Israel. I've never been to Israel. I love India. I've been all over northern and central India, so I need to do a tour of South India. Oh, my second degree is a master's in management of finance. Oh, of course, John. Of course. Jacques says, I think it's going to reverse now. Yeah, well, that's what we talked about. So what do you, right? First of all, we're above the 55. That means do not short. Even if it's a 1 minute 21, it means do not short. Oklahoma. James, is there a place to go to get sort of the history on the oil business in Oklahoma? Like, we should go to Cushing, right? Let's go to Cushing and do, I can do a presentation about the entire history of the entire oil business, starting from Quaker oil, right? All the way to the Baku if you want, and then do some trading of the energy complex and stuff. That'd be a fun thing to do from Cushing for sure. Japan, I love Japan. I think I'm going to take my family to Japan in I think we're planning for 2021. So I'll probably be there, but not for business. But I love Japan. I was there a long time ago, and I did a Forex presentation there. I think I mentioned in my book, I met this dude. We were at a bar and after the Forex thing, and I think he was one of the guys that came to my Forex event. And we were talking about, he was an astrophysicist, I think. And so we're drinking our pints. I think he was Scottish or Irish or something, but in Japan. Anyways, so we're drinking our Guinness, and he's like, yeah, he's building a computer to trade the futures market. And then we talked about all the things it couldn't do. And then I said, can you do it for Forex? He said, no, absolutely impossible, can't do it. Now, of course, that was a very long time ago. But there was a time in FX Bootcamp where I hired 2 people out of Credit Suisse. They were in Credit Suisse in Japan. And I said, hey, I want to have coaches, and I want to trade around the clock. So I got them to quit their job at Credit Suisse and become coaches. So I was hanging with them and all that kind of stuff. So Japan for sure. Love Japan. So anyways, looks like, is it 10:30? What time is it? 10:31. Yeah, I guess we're done, huh? Any last questions before we pull the plug? Go ahead and ask them. Meanwhile, I'm going to thank the moderator. Seriously, that whole idea where I typed in the wrong URL. And the moderator put in the proper URL. That's just amazing. That's top quality service. So thank you, moderator. Thank you, FX Street, for hosting for the 158? So, guys, let me write it down one more time. Charts.fxbootcamp.com. That gets you all my chart templates, all my profiles, all my indicators. Everything you saw me use today, every tool you saw me use today are absolutely for free if you go to charts@fxbootcamp.com. I do a free webinar for Traders Way clients every single day, 7:30 in the morning, US New York time. To attend those, become a client at tradersway.com. Okay, so then download MT4. Come back here, download my chart templates, install them. So now you have all my charts. You can choose a variable spread, a fixed spread, or an ECN account for your Traders Way. But in your back office, there's a button that says live webinars, and that's that. So you can attend every single day. So have a wonderful weekend. Thank you for the loyalty and respect you showed me throughout the 3 hours. Only one heckler today. He didn't like my charts. Or my computer screens. That's terrible. I guess somebody said I was bragging because I was racing BMWs or something. Okay. I'm sorry. I will hide my life from you so you are not injured by my bragging. So thank you, FX Street. Thank you. See you on Monday. If you become a client of Traders Way, I'll see you on Monday. So I guess we'll do it this way. Peace on earth. May the pips be with you. May your profits be above average. Thank you, guys. Cheers.